Hey everyone, today we're diving into a crucial part of Forex trading that can really impact your success. And that is choosing the right currency pairs, especially here in 2024. With so many pairs available, majors, minors, and exotics, it's easy to feel overwhelmed. So how do you know which pairs you should be focusing on in the upcoming year? Let's break it down with some fresh data that we collected in 2024. Most traders understand the importance of a solid strategy, but did you know that currency pair selection is just as vital? Some pairs work well with certain strategies, while others can leave you with disappointing results. And this year, we've seen some interesting trends. For example, the pound US dollar and the US dollar pairs have accounted for over 48% of total Forex trading volume in the first quarter of 2024, which shows how reliable they are for generating opportunities. If you're trading pairs that don't align with your strategy, it's tough to gauge the real effectiveness of what you're doing. Let's start with some of the most popular pairs, like I mentioned, the British pound US dollar and the euro US dollar. These pairs are often recommended for both beginners and experienced traders. And here's why. They're especially strong in this year. First is high trading volume. These pairs are leading the way in trading volume, and in 2024, they've been responsible for nearly half of all the Forex trading volume worldwide. More volume means more opportunities, so whether you're trading on the 1 hour, on the daily time frames, you get enough opportunities to trade on. The second benefit is the low spreads. Spreads are at an all-time low across most brokers due to increased market liquidity, with average spreads for British pound US dollar and euro US dollar sitting at just 0.8 pips. And third benefit is trending markets. This year, both the GBPUSD and the EURUSD have seen clear trending movements, particularly following the major economic announcements in February, which created a lot of momentum. Now, with these two pairs, another side benefit is that there's frequent economic news. And this year, we've already seen a significant number of impactful economic events. Just think about the ongoing ECB interest rate adjustments and the Bank of England's inflation control measures. These events mean fewer prolonged consolidation periods and more movement. If you've got a profitable strategy, there's a good chance it'll work on these pairs, which makes them a great starting point for testing. So, what makes a good Forex currency pair to trade? Now, here are a few trades that I look for, especially in 2024. First is low spreads. This is crucial for day traders and scalpers. With spreads hitting record lows this year, trading popular pairs like EURUSD is more affordable than ever. The second thing that I look for is a trending market. Good Forex pairs have consistent market cycles, and so far this year, GBPUSD has been trending roughly 60% of the time, which is great for swing traders. Then another thing that I look for is, like I mentioned previously, frequent economic news. With over 20 major economic releases impacting GBPUSD alone in Q1, you're looking at lots of opportunities for volatility, which is what traders thrive on. And another thing that I look for is high trading volume. Higher volume means stability and predictable movement. The EURUSD has led the market, averaging 1.3 trillion in daily trading volume. And lastly, the currency pair has to be profitable with your strategy. And this is key. If your strategy works with a pair, stick to it. It doesn't have to be EURUSD, it doesn't have to be British pound US dollar. It can be any pair as long as your strategy is working and profitable, stick to that. Now, let's flip the coin. What makes a pair less ideal to trade? It obviously would be high spreads, and this year exotic pairs like the USD ZAR and the USD TRY are seeing spreads as high as 7 to 10 pips on average. This can quickly eat into your profits, especially if you're trading smaller time frames. The second thing is low trading volume, obviously. Pairs with low trading volume, like many exotics, can be unpredictable. With average volume down around 30% compared to major pairs, these can be rough to trade profitably. Another absolute con for a pair is if it's just not working with your strategy, then it's not worth the effort. And Another thing that would put me off from trading a pair would be the constant consolidation, as many minor pairs have been consolidating a lot this year. For instance, the Aussie New Zealand dollar has been in a tight range for over 3 months, providing very few opportunities to break out and make significant moves. Can you only trade the so-called good pairs? Not necessarily. It's all about testing. Backtesting your strategy across multiple pairs to gather as much data as possible. Expanding from trading just 2 pairs to say a portfolio of 7 can help you diversify and potentially increase profits. Just keep in mind though that we've seen how trading multiple correlated pairs can increase risk. For example, opening positions on British Pound US Dollar, British Pound CAD, and British Pound AUD at the same time can quadruple your exposure to British Pound. So, to wrap it up, the best Forex pairs to trade are those with high trading volume, frequent news events, trending behaviors, low spreads, and most importantly, those that align with your specific trading strategy. So, keep testing, keep refining, and focus on pairs that give you the best returns for your approach. If you're looking to step up your trading game and explore new opportunities, I just gave you a solid starting point of where to go from. Thanks for watching, and I'll see you in the next video.